Let's get straight to our next management on the show. We have Tata Technologies. The revenue came in a little weaker than expected. EBITDA margins as well did see some bit of improvement. We have with us Mr. Warren Harris, the Managing Director and CEO at Tata Technologies. Hi, Warren. Good morning, and thanks a lot for joining in. Well, how do you see things panning out? The first half of the year could have its share of uncertainties because the globe itself is a bit of a flux. The ER&D space has been having its own challenges. So what are you penciling in terms of the first half of the year? And are you expecting a recovery in the second half?
Yeah, well, we expected about a month ago. We expected a very strong start to the fiscal year. I think the tariff uncertainty has certainly undermined that, and the current visibility that we have is that the first quarter is likely to be soft. But our optimism in terms of the full year is really informed by the fact that a lot of investment decisions were delayed last year. You know, if you look at the United States, there was a lot of uncertainty in terms of who was going to be in the White House. We've seen a lot of regulatory change and incentives for EVs run off in Europe. We expected that situation to be clarified. We were engaged in a lot of really encouraging discussions with our customers leading up to the end of the fiscal year, and we had a lot of optimism. But you know, clearly the tariff situation has confused that, and we're hoping that will provide some we'll get some sort of understanding of how that's going to pull through in the next month or so.
All right. Warren, thanks a lot for waiting by. As you were telling us, the global environment is still a little bit uncertain. But what are you penciling in for the year? I was looking at a JP Morgan note. They are factoring in, single-digit revenue growth with margins staying more or less flattish. Would that be a little bit conservative? Are you optimistic if things recover, you can do better than what they're estimating?
Again, I think a lot will very much depend upon the macroeconomic environment, and again, specifically whether or not we get the type of clarity that I think the markets are looking for in and around tariffs. If we get that, and we get that within the first quarter, I would be very bullish that we can do better than single-digit growth as far as this fiscal year is concerned. Again, a lot of our customers have built up a need to invest over the last 12 to 18 months. And as soon as there's clarity, we believe a lot of that will be discharged, which will provide tailwinds for organizations like ourselves.
An outside chance you even give double-digit revenue growth?
Well, I think we're certainly planning for that. And so at the beginning of the year, we were optimistic that would be the sort of North Star of the achievement that we were looking for. But again, we've got to be very cognizant of the macroeconomic environment and adjust our expectations accordingly.
Warren, hi, good morning. Prashant here. It's a very uncertain world, isn't it? As you began by saying, I mean, companies don't know where they should build. I mean, that's the basic starting point, whether they should move, not move. So in that sense, I mean, I guess investment decisions take a bit of a backseat. JLR, for example, is an anchor customer for you, about 15% of revenues.
Yeah.
Is this, what can you do, I mean, this environment, say, for example, if it stretches through for the next many quarters till the end of the year? For example, I mean, India is said to be the first in line for a deal, and that is only sometime in the fall when we start to see the outlines of a deal. Yeah. So if this uncertainty stretches for the next 2 quarters, what can Tata Tech do internally to mitigate some of the impact, especially on operational efficiency, etc.?
Well, I think you make a very good point, Prashant, about the need for clarity as far as investments are concerned. But I think one of the things that I would say is that the business that we are in, the manufacturing sectors that we are in, they're essentially product-led sectors. And so the automotive industry, for instance, if you're not making investment decisions today, you're compromising or mortgaging your future in 2 to 3 years' time. And a lot of investment has been put on hold in the last 12 to 18 months. And there's a lot of latent demand to deploy that investment and make decisions on products. I think different markets will play out in different ways. We're seeing India being somewhat immune from the tariff play, particularly those manufacturing companies that are focused almost exclusively upon the Indian market. I think Europe is making decisions in terms of interjecting resilience into their supply chain and standing in a position that's less dependent upon the United States, for instance, and the US is very much committed to the repatriation of manufacturing. And so our approach to those markets are going to be calibrated in the context of the specific opportunity that we see. So we're having to be agile, but at the same time, we're hoping for some of the volatility that we've seen in the recent past to settle down.
All right, final word from you, Warren, before we let you go. Since growth is going to be a little bit uncertain, what about on the margin parameter? You have been holding around this 18.5% odd mark. You want to give us a range?
Well, I think our priority, first and foremost, will be to continue to protect margins. I think we've demonstrated our ability to do that in FY25. I think you've seen also in the fourth quarter the flow through of the contribution of the joint venture that we have with BMW. So net profit and earnings per share has significantly improved. And again, our priority in the first part of the year will be to protect margins. But if we see growth coming through, and we're still confident that will happen, then we will certainly look to improve upon the margins in which we finish the year.
Warren, great speaking with you. Thank you very much. We wish you all the best of luck in this tough, uncertain macro environment. But as you said, a lot of the pending investment decisions also means latent demand when things clear up a little bit.